Home Depot is reporting. The company just reporting numbers. The estimate was for 226. Is this for real? I mean, can they really do that much, or is it adjusted? I got a 251 estimate, Nagel. That's pretty good. Now, same-store sales up 4.8. That's what you were looking for. U.S. 5.4, which was about what you were looking for. The bottom line number was up a lot. And in fact, the company sees fiscal year, what is that, earnings per share up about 33%. There must be stuff in there. It had seen fiscal year up about 29.2%. And for the whole year, 5.3% for comps is, I think, total comps. I'm not sure that's even U.S. comps. Also a buyback of about $8 billion. You see anything so far? You've got your little...
No, it looks
what is that thing called?
It's the BlackBerry. It's
That's
vintage.
a BlackBerry. It's got a little keyboard on it and everything. Huh? That's really. Should you listen?
I miss my BlackBerry.
So we even listen to an analyst that still has a BlackBerry. You know about iPhones, right?
I do.
Heard about Apple? And introduced this little thing.
They don't have as great a keyboard.
Okay, so far, what do you see?
The results look good. The numbers.
Stocks up right away.
So what I'm noticing here is like you said, Joe, the 5.4% comp in the United States is quite positive. And look, there's been a lot of concern out there in the marketplace about a slowdown in housing. As I'm looking through these results right now, we're simply not seeing it.
Although, let's back that up for a second. We're not seeing weakness in housing based on this, but that doesn't mean that there's not weakness in the housing sector, because when you come to Home Depot, a lot of people say you may not be able to buy a new house or get the mortgage you were hoping for, in which case you stay, and that's good for Home Depot too, right? This doesn't negate the problems or concerns we have about housing overall. Correct?
No, that's exactly right. That's exactly right. So, Home Depot is a different take on the overall housing environment.
Right.
And exactly what you're saying, Becky. I mean, you do have that dynamic. If people, for one reason or another, are not moving to a new home, not selling their home, they're more likely to fix up that home. And that benefits Home Depot. Now, it's my view on overall housing that things aren't that weak anyway, but I agree with what you're saying.
One little complication, I don't know if it's a complication, it says the company will have a 53-week operating results for fiscal 2018, but then talks about these numbers in the context of a 52-week operating year.
Yeah, so they do. So it's every 4 or 5 years they have a 53rd week. So that's already been baked into the guidance.
Okay.
That was already telegraphed.
And then they're saying their tax rate is approximately going to be 24%. So it's not going to come down to 20%. I'm assuming that's a function of some state taxes. Is that what that is?
That's correct. Okay. And that's also that's expected as well.
Yeah, I mean, 215 is the high, and we're trying to bounce off of 179 here, so it may not be related to housing, but then again, sometimes you see it move with housing, right? And you'd say housing, too, is a supply problem, not necessarily a demand problem as well, right? We were just talking about oil. I mean, we're not building as many the houses as we used to. That might be holding it up a little, right?
No, I think so. I've had that view for a while that, as we were talking about, Becky, the slowness in housing, a lot of that is supply-driven. As you think, so the underlying demand, my team and I put this piece out just a few weeks ago talking about this. We did a lot of work around the topic. The underlying demand for housing seems to be quite good. Now, there's maybe been a bit of a issue in the near term with regard to rates moving higher, but again, underlying demand is quite good. And look, that typically goes back to jobs growth and other economic factors. The same thing we look at for a lot of the same factors we look at for other retailers. But so I think when we see the slowness in housing, a big chunk of that is simply supply related.
You know, what's been crazy though, to see some of the drop in sales that we've seen in places like California, where it was down 18, 19%, some really kind of staggering numbers. You think that is entirely because of supply too, or is that because prices have gotten high?
Well, it could be the combination of both. Now, let's take it back to Home Depot made a comment. It wasn't California. I think it was about the Seattle market, which is another market that's similar type dynamic.
Yeah.
And I forget the exact numbers they gave, but they made the comment that they're performing very, very well in Seattle. So despite that type of pricing dynamic or sales dynamic, Home Depot continues to perform well in those markets.
There have also been these anecdotal reports about millennials really getting to the point where they are wanting to buy houses. The older age millennials are doing what you would normally do, which is have kids, and then they want houses.
And I love that narrative, because it was only a few years ago, the market view was millennials were going to buy homes.
Yeah, as soon as they start having kids, that changes.
But then,
right?
sure enough, now and again, going back to comments from Home Depot, they and Lowe's have made the same comment that as they look at their overall demand and they think they have their view of housing, one of the biggest drivers of demand right now is exactly what you're saying: millennials moving into that first-time home buyer.
We should leave that chart up. I mean, I like the way you look. Yeah, I like the way you look, Brian. But I think 183 now, so I want to see on a percentage. Yeah, 180. $4 now. So that's helping the Dow, which is now up 115 points pre-market, but that's a long way from where we were before we started yesterday morning. All right, and there's the chart. As you can see, it's even though nothing wrong with Home Depot or its results, but it's been affected in this downdraft
Absolutely.
as well, even as much of a quality name as Home Depot. The number that I couldn't believe was the earnings per share growth.
251.
Just that one, but also just the year-over-year gain, which was just you give a multiple of like 30 times earnings of this if you base it on its growth rate. There's stuff in there, isn't there?
Well, keep in mind that I think Andrew has hit on this. This year you have the lower tax rate.
Lower taxes.
So when you look at the year-over-year growth rate, you're benefiting from the lower taxes this year. Now, as we go into next year, that's going to be a non-event, right? Because taxes will smooth out.
Diluted earnings per share up 36.4%. So
and I'd have to do the math. Without the tax benefit, you're probably looking at something close. And I'm guessing it'd be probably closer to 20%. Which
Brian,
is still good for a company this size, right?